Okay, so we're good to begin with the next segment, deep tier financing, bridging the liquidity gap for supply chain resilience. And joining us on stage, we have with us Mr. Anup Agarwal, co-founder and CEO at Mintifi. Can we please put our hands together and welcome him? Over to you, sir.
Okay. Good evening, everyone. It's good to see a few people in the room out here. I know post-lunch sessions are difficult, especially as the last day, but it's a pleasure to be out here. My name is Anup Agarwal. I'm founder and CEO of Mintifi. It's a deep-tier supply chain financing company on the distributor dealer side. We'll talk more about what we mean by deep-tier supply chain financing. But more importantly, to begin with, Samir is not in the room, but Samir and to the entire team, kudos for the way you guys have put together this event. Bharat FinTech has today become one of the most sought-after FinTech event across the FinTech industry. And to get all the ecosystem partners together and to make it facilitate the process, I think is important. So kudos to you and your team. Today it's an interesting topic, right? I mean, when you think about supply chain financing, do you use this to move the slides? Okay, fantastic, yeah. So, the topic for today's conversation is quite interesting. When I was told that we should speak about deep tier supply chain financing, it's a fairly wide subject. When you think about how complex this whole subject is all about, you're talking about a very powerful and an interconnected system which starts from as basic as something being produced in the farm and going all the way to your dining table when you're actually consuming something. So imagine a situation where, let's take the example of a cotton being produced into a farm, going to a factory to produce a yarn, from there to a fabric, and from there going all the way to produce an apparel. That entire thing where there are multiple producers, manufacturers, service providers, transporters, all of them put together are essentially what we call the supply chain as an ecosystem. And all of those people are interconnected from one very principal thing, which is a trade. But the lubricant to drive that entire ecosystem is essentially finance. And this is where the whole deep tier supply chain financing comes in play. You can split the entire deep tier financing in two aspects of the business. One is what we call as a supply chain on the supply side of the ecosystem, and the other is a demand side of the ecosystem. Now, what I mean by the supply side of the ecosystem, so anybody who's producing a raw material, any form of a raw material, for either a large manufacturer or is producing it for a B2B, so you're producing something, giving it to somebody else, who in turn is producing something like an intermediate product, and in turn is producing a finished product. That whole ecosystem is what we call the input side of the supply chain. And this is where you've got a large number of companies who are looking to take financing to buy a raw material. When they produce a raw material, then they sell it out. They have to wait for good, maybe 30, 60 days to get their payments back. So there is a need for working capital to bridge that whole credit terms, which essentially, companies like FinTech or the newest supply chain financing companies are able to do. The fast forward to the next side of the supply chain is essentially what we call as the demand side of a supply chain. Now, what is the demand side of a supply chain, right? I mean, imagine a situation you are producing a product which is somewhere in Chennai, and you have to sell that product in Siliguri. In the world of, we are living in quick commerce and modern trade, fundamentally 80% of India's total trade still happens through a section which is called the general trade ecosystem. Now, what is a general trade ecosystem? These are all the intermediaries. Think about starting from a super stockist, a distributor, dealer, right up to an end retailer who's selling the product from a manufacturer to a retailer, is the one who's part of a demand side supply chain ecosystem, is the intermediary who's driving the trade in that market. So you are a manufacturer sitting in Chennai, and now you have to sell a product in Siliguri to your consumer. How do you actually reach to them? You go through a channel which is essentially consists of, let's say, a distributor, a wholesaler, who in turn will appoint a retailer, and the retailer in turn will market your product to the end consumer. So there's a movement of goods happening, which is a trade, and along with that, there's also the financing element that is required, which essentially comes in the form of what we call as a demand side supply chain, right? So the balance sheet of any corporate, you have got the payable side of a corporate, which is essentially on the supply side, and then you've got the demand side of the receivable side of the balance sheet, which is essentially called as the distributor dealer channel financing. Now, each one of them today, thankfully, for the last 5 to 7 years, we've seen the market maturing in a very large way. You've got a bunch of new age companies, including somebody like Mintifi, who has come in and is helping drive that entire ecosystem. So imagine a situation where over the last about 10 years, right from large exchanges in the form of a Threads platform to the technology companies, the likes of VFin and Finbox, to the likes of companies who are in the export financing side. This is another very, very important component of what we are talking about from a supply chain side, right? Today, when an SME is selling to a Walmart or is selling to, let's say, a Teddy Maxx in the US, he has to wait anywhere from 90 to 120 days to get his payments back. And on the other side, you've got all the major export factoring companies. So think about names like India Factoring or Drip Capital, who can today enable the entire ecosystem in a manner where an SME can get its payment on day one of shipping. And these companies, which are the export financing companies, can collect the payments from the overseas buyer after 90 to 120 days. So essentially, there are a huge number of companies who are facilitating this trade across the supply chain side, across the export financing side, as well as the demand distribution side, which is on the distributor dealer side. Having said that, I think it's very, very important for all of us to appreciate that how is this being driven from a demand side. And one thing, when we think about supply chain, I think where we miss out on is the contribution of the SMEs in the entire ecosystem. I think fundamentally, when anybody think about either the deep tier or think about supply chain, the biggest driver of this business is nobody else but the SMEs who are part of this entire ecosystem. And the data out on this slide is pretty self-explanatory. If you were to kind of just dissect and bisect the information to appreciate that, what the level of contribution we are talking about of the SMEs in the entire ecosystem, nearly about 30% of the total GDP in India is contributed by the MSMEs. In terms of employment, they are more than 50%. In terms of exports from India to GDP, they are more than 30-35%. But the paradox to this entire thing, so on one side, they are the real heroes in this country who are driving the economy, who are ensuring the prosperity for all of us. But on the other side, the moment you move into the financing element for all of these SMEs, you see a very, very different paradox, which is very hard to explain, that our economy is growing at north of 10% year on year for the last 15 odd years. The bank credit to the entire ecosystem is growing at about 14% year on year. So you're talking about a 1.2 to 1.3x correlation between a bank growth rate versus a GDP growth rate. But on the other side, the financing to SMEs is growing at 0.8x the GDP growth rate. So from a overall contribution perspective, you have got one set of the ecosystem which drives nearly 30% of the total GDP. But in terms of the total financing being made available to them, it's only about 7% of the total bank credit. And when RBI or anybody talks about the whole element of underbanked, unbanked, and the need for financing for SMEs, we were able to do some data crunching and get to a number which is mind-boggling. You're talking about $300 to $400 billion of financing. Forget about an excess capital being made available to them. Just the normal amount of financing that was otherwise made available to all the other constituents in the ecosystem, but SMEs being starved of capital today, the whole ecosystem is today about $300 to $400 billion short of the total capital that ideally they should have got it from all these various financial institutions that are available out there. In the whole context of when we think about from the macro perspective, we spoke about some of the numbers, but on the other side, if you were to also look at dissecting the data from a balance sheet of these large corporate partners, and this is a very interesting data that we pulled out. So what we essentially did was said, hey, you know what, one is the macro data. Just look at the companies that Mintifi is serving. And we work with north of 300 plus companies today. So this is the data, representative data of just about 200 companies that we work with. And it's very interesting to see what is the size of the problem that we are talking about from the SME perspective who are working with these large corporate partners. So if you look at the payables of all of these corporate partners, payables is essentially what the corporates need to pay to these SMEs or the vendors with whom they procured the inventory. You're talking about nearly 110 days of credit, which means SMEs are being paid by these corporate partners after 130 days. On the other side, if you talk about from a receivable side, which is essentially the corporates have sold an inventory to the distributors and have to collect payments, that is about 45 days. Consistently for the last 15 odd years, both sides of the balance sheet, be it the payable side or the receivable side, it is a humongous amount of credit sitting on their balance sheet. And a lot of times when you'll debate it out to say that, but why is a corporate extending credit from its balance sheet to the distributors? And this is a very interesting thing. The SMEs with whom they are working, the typical distributor dealers and stuff like that, they don't have access to working capital. Now what that leads to is a situation is, on one side, you need working capital to grow your business. Banks, unfortunately, or whatever financial institutions are not providing access to credit. On the other side, the corporates are willing to offer anywhere between 2 to 3% cash discount for anybody who's willing to pay an upfront amount to the corporate for buying the inventory. So an SME is ready to leave between 24 to 36% of annualized return on the table just because of the fact he doesn't have access to working capital. So it's leading to a huge amount of margin erosion for these SMEs, impacting their growth, stifling their economic prosperity. But unfortunately, the access to working capital is the one which is leading to all of these situations. So be it on the payable side or on the receivable side, the corporates today, while they are enabling in some shape and form with respect to either the TREDS platform or companies like us who are providing the channel financing to the distributor dealers, none of us have been able to reach still to a large extent, even a small part of the overall ecosystem. You're still scratching the surface in terms of the overall opportunity versus what we've been able to deliver so far. But in the midst of all of those things, fundamentally, supply chain is by far the most powerful solution that can enable economic prosperity for these SMEs. When we talk about the challenges and say, hey, you're talking about a $300 to $400 billion worth of opportunity that exists in the market, but how are you going to look at solving for this problem? And this is where, when you think about the financing solutions that are available in the market, while there's like an overdraft facility available, there's machine financing, there's term loans which are being offered to these SMEs. The most powerful solution today for any SME is essentially in the form of supply chain. Now, why I say supply chain? Fundamentally, because it's an ecosystem play between a corporate on one side, the distribution or the vendors on the other side. What it essentially allows you to do is, for a financing company, it gives you a huge amount of information to underwrite these risks in a far more informed manner. The moment I become a part of an ecosystem, I get access to a huge amount of trade data, which essentially enables me to underwrite these SMEs better. The beauty about supply chain is that the financing is done in a manner where you don't pay to the borrower directly, but you pay to the corporate for helping him buy or helping the distributor buy inventory from these corporates. So the end use of the funds, which is a very, very important parameter in the entire lending business, is completely established in a supply chain kind of a model. And the last but the most important bit is there is zero cost to acquire these customers, because you're part of an ecosystem where there are already millions of SMEs, both on the payable side, which is a vendor side, and on the distributor side, they're already working on that network. So you're not having to kind of go out, spend money to acquire these customers, work with some DSA channels or whatever. The entire system is already well laid out. It's a well-oiled machinery. All that you need to do is go deeper and deeper into that ecosystem to enable the growth in this entire ecosystem. So a lot of times when I speak on forums like this, it's like, oh, are you inviting more competition into the ecosystem? Fundamentally, if it is good for the SME, if it is good for the ecosystem, it will always be good for all of us who are sitting out here. And so we believe that it will be good for Mintifi too. When we talk about supply chain, the beauty about this whole thing is just like last 5 to 7 years, we've already seen 10 plus companies having created north of $5 billion worth of enterprise value and are already processing $25 billion plus of invoices on an annualized basis. So the industry has already matured. You're already seeing a huge amount of investments coming into this segment. So about, when I started Mintifi about 8 years back, there was only a couple of banks who were doing supply chain, and the industry was not known to create a standalone supply chain company. And I'm very proud to say that as an ecosystem partner, and for all people sitting out here, we've been able to create a massive kind of a revolution around the whole supply chain, which is essentially enabling a combination of two very important things. One, it is enabling SMEs to get access to working capital, but most importantly, it is enabling them to get access to working capital at the least price point. When you think about the TREDS platform today, an SME who's selling a grain to an ITC can literally get his payment in less than 24 hours time frame at a price point of 7 to 8% per annum. When he is working, when Mintifi is working with a distributor or a retailer, he can get financing, 100% unsecured financing for as low as between 12 to 14%. All of those things has been enabled thanks to the ecosystem that supply chain companies have been able to create. And most importantly, because the underlying risk around supply chain is significantly lower, which is essentially the comfort that lenders seek for whenever they are lending in any ecosystem. We should not take away the credit from the government of India. I think when we talk about supply chain, it's very important to also appreciate the fact that a lot of work across the supply chain has not just been done by the supply chain companies. I think the foundation layer has been laid down by the government of India, by the Reserve Bank of India, starting right from, if you think about from a regulatory perspective, right? About 10 years back, they made this massive change in the way the large corporates deal with these SMEs. They were necessarily made to ensure that they make the payments to these SMEs in less than 45 days. Before that, you were at the mercy of these large corporate partners. You could get paid into 90 days, 120 days. You would made to run around to collect the payments for the services that you offer to these large corporate partners. And today it's been made mandatory for you to ensure that you make payments to these SMEs in 45 days. On the other side, you've created this huge number of exchanges, regulated exchanges, very similar to how you today have like a BSE or an NSE, where you can go and sell your invoices, and there are a bunch of lenders who will be able to buy these invoices and provide liquidity to a large number of SMEs, right? In just about 5 years, today you're talking about close to 2 lakh crores worth of invoices being funded on these trades platform on an annualized basis. So imagine the pace at which liquidity has been made available to these SMEs, and none of this would have been possible without the government of India actually supporting this kind of a regulation. The recent budget has actually enabled a further, so to say, platform or the foundation for the entire now the export financing or the export opportunity for the SMEs in India. So to a large extent, export financing still is a very, very untouched market in this country. A lot of these SMEs gets paid after 90 days, 120 days. So the recent budget that came in about a week back, the government of India is now similar to a trades platform, is now putting together what's called as a Bharat Trade Net, where all the ecosystem partners, right from whether it is shipping companies, logistics, insurance companies, all the financing companies are coming together so that exporters, when they are kind of exporting to overseas market, they don't have to wait for 90, 120 days to get their payment. They have also enabled in a very interesting way, one of the most important things that the government of India has been able to do is also change the entire definition of what SMEs is all about. So today, a company with a turnover of all the way up to 500 crores is essentially classified as an MSME. Now, what that essentially leads to is a situation where any kind of a central procurement that is being done by the government of India, any state procurement, they have an allocation of about 25% of the total allocation of the total inventory buying that they need to do has to be routed through the SMEs. So on one side, imagine the situation for all the SMEs that the government of India has been able to create. On one side, you've got a demand being created where they've mandated all the government agencies to procure the inventory from the SMEs. 25% of the total procurement has to come from these SMEs. On the other side, these SMEs need financing, so they've created a trades platform so that people can go and also ensure they get the payments on a timely manner at a pricing which is as low as about 7 to 8%. And now the same ecosystem is getting replicated for people who are exporting in the international market as well. So a large amount of work has been done by the government of India already. Now it's up to people like us who are part of the supply chain ecosystem, and how do we use this infrastructure, the account aggregator, the GST, the entire Aadhaar network to enable more and better financing for the SMEs, who are the true nation builders, as we call it, in helping drive the entire ecosystem. The last one, I think it is very, very important. I think a lot of people think about supply chain from a perspective of this is any other form of financing. And it's easy to go out and lend because all you're doing is essentially discounting an invoice. It's a much harder problem to solve. I think people who are I don't want to discourage people. While the opportunity is fairly large, I would also want people to appreciate the fact that this is a highly complex, highly regulated business model. On one side, think about this is almost like a payments business. Now, why I mean by a payments business, the velocity at which the transactions takes place. These could be a 7-day invoice, this could be a 15-day invoice. So you're managing millions of invoices, and therefore reconciliation of these invoices, the way the payment is flowing, the entire settlement of these transactions is not easy. Just to give you a context, in Mintifi's case itself today, we process about $6 billion of total value of invoices on an annualized basis across about 40,000 SMEs on an annualized basis. So you're talking about huge volumes of data being processed on a real-time basis. And this is where if you do not have proper systems in place, if you do not have the reconciliation processes in place, it will fail miserably. At the same time, because you're working in an ecosystem, this is not a standalone bilateral relationship between a lender and the borrower. You're talking about an ecosystem where you're working with large corporate partners, you're working with exchanges. So all of these things means while on one side, you get a lot of support coming in from the ecosystem player, you're getting access to data, you're getting access to stop supply, which essentially ensures that people pay you on a timely basis. But that also means that you have to be a lot more disciplined in the way you're going about building the business model. You are open to a lot more audits, checks and balances. You cannot charge crazy rate of interest rates. You cannot disrespect the ecosystem. So you need to be a good actor for people to allow you access to the entire system. And that takes time. A lot of time when we talk to people to say, hey, you know what, we're growing at about 200-300% year on year. Supply chain financing companies typically tends to grow at a much slower pace. That's because of the fact that this is not a bilateral contract between me and the borrower. It's an ecosystem that needs to get developed across multiple stakeholders. And unless you do not are mindful of this whole thing, you'll never be able to scale up this business. The last and the most important bit is the highly regulated business model. So while lending overall is a fairly regulated model, I think this is even more because you are dealing with a lot of proprietary data. You are dealing with a lot of information about the trade aspect of principal to principal transaction that is taking place. So to that extent, it's a complex business to build. A lot of people, if they are trying to morph their existing systems and trying to build the business, they may find it slightly more complicated to do so. But having said that, I think it's an immense opportunity for anybody who's going into this space. Supply chain is just still, as I mentioned earlier, we are scratching the surface. I see some friends finally in the room out here. So congratulations to all of you guys who built a fantastic business model in supply chain. I think as ecosystem players, I'm super proud that there are about a handful of companies who've done a great job across be it technology. We've got Raja from VFin who's essentially processing those millions of data, processing these transactions for banks to enable them to lend to these SMEs. You've got Ram sitting out there who's on the exchange side, who's ensuring that a huge number of vendors get paid on a regular basis. And then there's Mintifi, who's essentially ensuring that the distributors get access to working capital financing. So thank you everyone for listening to us. Happy to take any questions, but it's been a great out here today. And congratulations once again, Samir, for putting together a great show. Thank you.
Well, I think that presentation deserves a bigger round of applause. Thank you so very much, Mr. Anup, for that very pertinent presentation. And I would now like to invite Mr. Shashank Shekhar to please felicitate Mr. Anup with a memento, a token of appreciation. Well, a fantastic presentation delivered right there. Thank you so much, sir, for taking us to some very important insights when it comes to really taking us through how deep tier financing is an innovative solution that is actually addressing the liquidity gaps in supply chain.
Can I ask?
Thank you so much.
Thank you.